Hello everyone, this is Heather again, and this video is a part of our series on how to use live options flow to find out really good trade ideas both intraday and swing. This video is about an intraday trade ideas for MVIS on April 26, where the price moved from about 20 to 26 within the same day. We are going to see how, if we were looking at the live options flow in the first 30, let's say 60 minutes of the day, we would have found this setup because it was right there for the taking. So on April 26, we had something like a short squeeze for MVIS. It was famous in Wall Street bets, and it had already rallied from 13 to 17 the last day. So it gapped up just a little bit. We had a resistance level here that we crossed. So now this was actually a breakout as well. So that was a positive sign because this was a resistance level. Now it was going to act as a support level. So when we opened, we are going to see how we could have identified this as a really good play. So in front of me, I have the live options flow tool open, and the flow that I have opened is from April 26th for MVIS. So let's start looking at the flow from the very start of the day. So this is 9:33, just 3 minutes after the market opens. The stock price was at 20. The price opened at 19, but within 3 minutes it was at 20. And you can see all these sweeps and call buys coming in. There are no puts, and I have not applied any filters. So literally in the first 22 minutes there are no puts here. So we can see buy, but these buys are for 19, for 10. So these three rows wouldn't really alert you because these are in the money calls, and sure, in the money calls can sometimes be used for hedging, and they are not really that directional. If you're seeing 4 out of the money calls, then you gotta be alert that something might happen. What happens here in the very fourth order that comes in, you can see that this is a 33k 333k order for this is probably June, yeah, no, July 16th, and the stock price right now is 22, but the strike is 30. So someone is expecting the price to move up significantly within a month. And now this could have been a swing trade idea as well, but as whenever you have these short squeezes or these volatile stocks, you always want to just day trade them using live options flow, and you want to swing trade the more stable stocks such as Apple, Facebook, Tesla, things like that. But MVIS, it had already moved a lot in the previous day, so probably it would have been a good idea to day trade it, but still it was just sort of 1 month away. The date is 1 month away, and people, you should know this, that whoever bought this contract is not going to keep it till July 16th. They just bought a contract because they're expecting the price to go up, and then as soon as the price goes up, they're going to sell this contract for very large profits. Maybe they're going to keep it till the end. We never know the real intention. We can just assume things. So as whenever you see anything less than, let's say, about 1 month or less than 1 month, then that's a totally fine idea for both intraday and swing. So here again we are looking at intraday, and we are looking at the data from the first 30 minutes. We always want to use that data for intraday trading. So right here you should have been alerted because this is a sweep. As we have discussed, sweeps are good, and they show that someone is in hurry and they want to conceal their actions. The amount spent was pretty large, and again the expiration was short, and the strike price was far from the stock price. We were only at 22. Then the very next, actually at the same minute, we have 3 more orders for very large premiums for just about 20 days away. So this was July. This was actually 2 months away, 3 months away. My mistake, but this is May. Now May is only about 20 days away from this point of time. So these were even shorter term orders, and the price was only about at 22 here, and then 22.27 here. So but all 3 of these orders were out of the money strikes. So the price is at 22. Someone just bought 24 strikes. That means that in short term, price is going to reach 24. That's the expectation here. Next, we see a 10 one, and then we see a 21. For this 21, we can see that this was bought above ask because of this yellowish line. That's what it represents. If you go to colors explanation, premiums greater than 100k and order filled above ask. Those are always good for confirmation purposes. Again, 20, 15, 17, okay, sure, but this one you might see that there is something red, but look at the expiration date. Someone is expecting the price to drop by 2021. We don't care about that expiration date because that's far away. We only care about the expiration dates that are close to the current date. So you are just going to ignore this one. Then if we go up again, this is August, this is close, obviously this is 19, so someone is expecting the price to drop, and this is again August. But if we keep going up, 19, 17, 30, okay, so here comes the 30 again, and these are now May orders. So the price is still at about 22. In the last 20 minutes it has been going slowly from 20 to 23, but these 30 orders just came in again. And look at the premiums again, large premiums, and now the expiration date is even shorter. So we had July 30 strikes before, now we have May 30 strikes, and we are in late April. So just the first 22 minutes of this options flow, you can see that there is almost no bearish flow for the short term, and there is tons of bullish flow for the short term. So what we could have done is we could have just entered right at the open, let's say within 15 to 20 minutes probably, and then we would have gone all the way back up in that day, and then since again we are trying to do intraday trading, we would have sold. Now let me show you a few things where they could have actually helped you sell as well. So again, we have this sell, but look at the sell, look at the strike price. Someone is expecting the price to stay below 35. This was obviously a worrisome one, because someone is expecting the price to go below 20, and we are at 22. So again, and this has a pink, so this was probably filled below bid, yeah. But then you can see we have all these calls again, and we have these sells that are expecting the price to stay let's say at 22 or go below it, and then we have all these call buys again. Now look at these strikes, we are still at 22, so probably when you saw these orders, okay, you were a little bit worried, but within 10-20 minutes, look at all these, like 35. So now someone is expecting the price to go from 22 to 35 within, let's say, 20 days. And again, they're not really expecting the price to reach 35 level and go above it, or at least touch it. They're just expecting the price to go up so that they can profit out of their contract and then they can get out. But the strikes can still give you an idea on how much is the price going to increase or decrease. And then we have these 22 ones, and we can see that we actually go to 23. So these were a bit worrisome, and I'll explain why. So then we go here again, all calls, like there was so much bullish pressure this day, which is why we went to actually 26. Now again, all call buys. Then we have some puts at the end of the day, and those puts are for 24, 25, 24, 20, and pretty large premiums were spent. And at that time, we were already at 26. So we went from 21 to 22 to 26 based on all the calls that we saw in the first 20 minutes. And then at the day end, again, there are still so many calls, so many call buys, but let's look at the largest order. So we have again this, but this is just one strike. So let's just totally skip that because this doesn't make sense, although the premiums are too large, so large. Let's see, 25, 25, 25. Then we have a put for 15. So someone is obviously, I think, but it's a spread, so we ignore it. Then again, we have 35, 35, 35. So overall, we always want to talk about the majority. It looks like that this might actually touch 35, but then we have these huge put orders that are towards the 24 and 20. So when we are at 26, we might expect the price to go to 35, or we might expect the price to move towards 20 because of those puts. We don't know what happens, because at that time it's all real time. What actually happened was the price actually dropped the very next day. So which is why when you're looking at the first 30 minutes of options flow, you want to use that for intraday trading instead of for swing trading. So you should probably close your positions by day end if you're profitable. So again, I just wanted to sort of go over my thought process on how you need to follow the live options flow in order to find good intraday plays. You can see that we actually dropped here, and We tried to respect this, we went up again, but we finally sort of broke the support level, and now we are below it. So now the setup is almost invalid. But I was really fascinated by looking at all these call buys, because they provided you a clear indication on on how the price might potentially move in for the rest of the day. Thank you so much for watching this video. This is probably the end of the series, or we might create a few more videos for the series, but thank you so much for watching it. We will see you guys in some other video.